helping answer some questions. And again, going over iZone Sharpshooter and have the Darrell template that for iZone Sharpshooter that I like to use. And basically, it's just a regular iZone Sharpshooter, with a couple variables on it and different things you can put on there. And we add in VAD A and VAD E. And a user gave me a question this morning. Miriam was actually talking, and she's like, hey, where do you see VAD divergence? And on the iZone Sharpshooter chart. So I want you to notice that I'm using the setting of a continuum bar. That's a unique proprietary apex bar that factors in both space and time. So if a market moves one way or another way, or enough time passes, it will start a new bar. So that way you don't get massive bars all over the place, but also you don't lose the factor of time like you do on a Renko bar or something like that. And again, that's a completely unique bar made and invented by me here at Apex. And but I'm using the settings of 3, 12, 60. That means if I move 3 ticks in my trend direction, 12 ticks in the opposite direction, or 60 minutes pass, if any one of those 3 things occurs, it will start a new bar. And you can edit that in your bar settings. So I'm just going over some basics here before I dive into VAD. And the indicator settings, yeah, that's not the right one. Bar settings. Let's see here. So right here on my data series, so right click and go to data series. And then I chose Apex Continuum Bars. And I put 3, 12, 60. Okay? So again, that's 3, 12, and 60. And then I have a question on my other settings. So we're going to go into indicators, and we're going to go down to my trend catcher. And we'll see what I have over here. I have 7 on my trend catcher. I should actually have it at 15. So I prefer a 15. I found that the 7 is too quick. So thank you, Mike, for bringing that up. So on this chart that we were working on building yesterday. Good call. So again, setting the speed to 15. And the reason I found is that the 15 will be a little slower. Okay, that's obviously not fun, but it doesn't give you like a signal every time the market turns. I mean, that's sort of useless. Like, okay, bar went up. I know I have a signal. Like, doesn't help a whole lot. So found that over the long run, I've actually enjoyed the 15. Now, I have iZone Sharpshooter up, but I'm not just like totally reliant upon iZone signals. A lot of times I'll hear people go, how do I get a, I missed a signal and not everything lined up, and so I missed the trade, and I'm looking for various trades. Notice I have the apex pattern on this chart, so I've expected ranges on this chart. So a lot of these things tell me that a variety of different trades that I can do. Like with the ranges, I can do what's called the boomerang trade, where when it hits the range, expecting it to reverse. With the apex pattern, I can trade the pattern, where you buy whenever you have A, B, E, and then it breaks out, and you just keep going. With the MVP line on there, this one right here, if I get 2 apex patterns in a row, and then the MVP flips, like 2 higher apex patterns in a row, and the MVP flips, I get what's called an MVP reversal. And let's see else. We got one on here. Let me bring another one up. On the VAD, I label them and the labels. And where did we put them at? We got VAD A, VAD E on here, and I changed the label to VAD A and VAD E so I know which is which. Okay, and then I got MVPs on here. The zones are on here, deviations, trend flip, trend bands. That's the colors right there that you're seeing. I got block orders. It's just something we're testing, so you can ignore that. let's see here, we're actually building that more into our order prints anyway, so I could actually take that out. And then of course I got the Elite Pattern version 2, and I got ICE version 2. So those are the indicators I actually have on this screen. So not Trendar is not on here. Okay. I got Trend Flip. Does that help answer your question? Marion? I'm waiting on you, Marion. This is just how I trade it. So it's just, what I found consistently that I like. So that's sort of how iZone Sharpshooter came up. Is I was so busy trying to make systems that fit everyone's needs and wants and schedules, I sort of lost track of my own trading. And so I actually took like a month off at Apex. I was still there, but and I got out of the room, and I put everything on the charts, and then I just started deleting stuff that wasn't giving me help or just duplicating signals. And iZone was born, and then I traded it, and I traded it through crazy markets, flat markets, all sorts of markets, and eventually it became what it is now. So another thing that we have on here that I want to highlight, it was in the video from yesterday, but where I also went over the 4 steps of what I look at to do a trade. That was a really good video. At least I heard it was a really good video. Is right here inside my institutional zones. If all the little zones, so some of you may not have heard this yesterday, if all the little zones are confusing you, you get a little red zone, little green zone, and you're like, I'm running into zones and all that, you can increase the size. I have it at 20. It may work better at 10 on a certain market, or it may work better at 30 on a certain market. Your goal is to get a zone, but not be like don't get overly concerned with them. Use them as a reference point of when the market had a hard time breaking through. And I found that the two really, because I was trying to figure out, I was sitting with Ben and John, and when he flew over here from Australia, and John came in from San Antonio, and was trying to figure out, how can I communicate to traders better about these zones so they don't take every little zone and make it gospel, And so we were playing with settings, and I'm like, okay, this sort of deletes those zones I ignore. I don't pay attention to a zone that's, half the size of my pinky type thing, right? And I want one that's actually stuck around for a while. So I changed that to 20. So if you want to change it to 20, again, that's an institutional. You right-click, go to indicators. So you always can get to the indicators. Find your indicator, institutional zones. And under parameters, okay, it says bars forward. So this is saying, like, what this is telling you, just so you know, is it wants to know that a level hasn't been broken, 14 bars back and 20 bars forward. Essentially, there's a couple more things to it, but that's essentially what it's looking for. It's looking for an actual strong support line. Okay, and we do have like a green support line down here. There's a zone, like it's real faint, but you can see that green zone right there. And you can always change the colors. One of the things I actually prefer to do, so I'm going to change it. This is going to make it really bright, but if you're having a hard time seeing some stuff, you can right click and go to properties, and we're going to make our background white. Okay. And just by doing that, it's a little brighter, so it can be harder on the eyes. Like a lot of times I like black at night, so I'll show you. If you do change it to black, you have to change like your axis and your crosshairs, but sort of looks cool too, right? Cool looking chart. But if I'm trading in the evening, I like a darker screen. But we'll put that back, and we'll hit OK. All right. So that makes the zone a little easier to see. Sometimes that zone can be hard to see with the gray right there. And so the question came up. I was like, hey, I see some, there's some good, bad divergence signals on NASDAQ this morning. And Marion asked, hey, where do you see this? And I'm like, hey, I'm looking at an IZone sharpshooter chart. And so some of you do and some of you don't trade IZone sharpshooter. That's personally my favorite system because I've traded it so long through so many different markets. And I've added to it, of course, like we're seeing right here with the VAD and stuff like that, putting MVP on there. But one thing I'm looking at for a quick summary on VAD, if you haven't seen or watching the trainings or whatever, is I'm looking at VAD E. One of my big guidances on what direction I want to trade. This right here, this simple indicator, as far as me wanting to trend trade, whether it be futures or Forex or spreads or binaries, okay? Directionally trade, like thinking market's going up, thinking market's going down. So Mike, you mentioned binaries, same thing. I try to stay with the trend. And a lot of people think this is just like a little red-green indicator. They don't understand what it actually is. Like, well, the market's going down, so it's red. The market's going up, so it's green. Well, yes, okay? But let's actually look at the settings on this thing. Let me pull it up. We'll shrink that. And so we have 42 contracts of volume on this downturn. And we have, 89, 201, 441. Notice how the number is rising? It's not just a histogram on movement. This is actual volume, okay? So it's adding all the volume from each bar. So it's taking that bar's volume and that bar's volume and adding it together. This one is taking all three bars and adding it together, okay? So it's adding all the bars in the trend's volume together. It's not simply a red, green, MACD, whatever histogram. It's volume using our trend formula. We have 5 trend formulas, okay? And we found that I came up with 5 different ones, and my favorite 2 were A and E. Okay? So again, this is volume. It's not just a histogram. We can display it in a lot of different ways. I know Jeff South has a really cool method where he has like several VADs on top of each other. It's really cool. But anyway, so VAD E, I like to trade in the direction of VAD E. This keeps me from like taking a buy here, right? Or taking a sell here. It keeps me from going the wrong way. I did a big forum and with one of the, I guess we can say now, used to be major FX brokers. And basically several head guys, and they had all these finance degrees. I have no finance degree. I'm homeschooled, but I learned at home and at other people's homes that trade. But one of the things he said is, he's a broker. He sees what goes on, and he said the number one reason traders lose money that they see is they go against the trend. He's like, they always think they're going to catch that reversal. And it's not that I'm not for counter trend trading. I am. Okay? But I need something to tell me there's a counter trend. So I'm trading with the direction of VAD-E almost all the time. Okay? So I always put that almost in because there may be some extenuating circumstance or something like that. But as a general, objective rule that's wise to follow, I follow the direction of VAD. Yes, Mark, if you remind me, I will cover that, definitely. All right, now, how do I use VAD-A? this is what I found, because I put this on my chart. We came up with all these ideas. I had all 5 of the formulas on there. And what I'll do is, like, we'll come up with an indicator and we'll work on it, and I'll stick it on my chart and I'll watch it sometimes for a week, sometimes for months, until I either see a pattern or don't. After like 3 months, if I don't see a pattern, we delete the indicator. It never goes public. Okay. There has to be some sort of consistency pattern. And what I found was, again, this is just a different formula for measuring a trend. Okay, it's a little tighter. You can notice it sort of goes with the market, like that goes up and then that goes down, up and down. So it's really sort of reflecting the market. Okay. But what I'm really looking for here is that is volume accumulation and distribution. Okay. And what I'm looking for is when the market has what I call exhaustion. Okay, so that's the key word here is exhaustion. Lori, is my mic coming through okay? Am I talking too hard into it? So what do I mean by exhaustion? I know there's a way. Hold on, man. Hey, Tony, hit pause. All right, I'll leave the box and I won't touch it. The mug is staying. All right. Sorry about the interruption. Hopefully, okay, we're recording again now. All right, sorry. Okay, I was back. I can't believe I can remember what it is, but I was back on exhaustion. When I'm looking at VAD-A, I'm really trying to take advantage of exhaustion. Exhaustion is when the market makes a push. Okay, so just to give you an example, against the trend. Okay, so it makes a push against the trend, and then the trend continues back in its direction, and the market tries to make another push against the trend, but with even less volume. So let's say I'm looking at green. Okay, so market going up. What color would I be looking for in VAD-A if I was talking about against the trend for exhaustion? Would I be looking at green or red if the trend is green? So exactly, I'd be looking for, I'm ignoring the green when this thing turns green. I'm just looking at the red. Okay? I'm not looking for both of them to turn green or both of them to turn red. I mean, some people can do that, and it works. I've actually heard people doing that, and they've had success with it. So that's awesome. But that's not exhaustion. Okay, that's just both of them lining up in the same direction. So that's, I mean, that could be a confirmation signal or whatever. My favorite way is to use what, again, I call exhaustion. So the trend has turned, green, and we had quite a few signals come on up, and so right there, you got that, and you could look at that as, okay, well, we got a green signal and green everything else, and the bar is red, but if you had trendar on there, then that would sort of override that bar. But sort of what I found with trendar is it so mimics the close of the bar that it just sort of becomes, whatever. But it becomes duplicative. So since the market turned green, I'm looking for, now this is just, there's one of many signals on this chart. And I'd like to have a lot of signals on a chart, so I'm not waiting all day for a trade. Okay. So now I'm looking for the red up here. And what I'm looking for is a push down with a weaker push down. Okay. And I don't just have to start looking at this point. I can even look backwards. Okay. So, because let's look at this right here. Again, what I'm saying is I don't have to start on this bar. I can look back to see divergence. A lot of people don't know that. They think that they have to start right here to look for divergence. Okay, where sometimes the best divergence you're going to see is actually backwards. Okay. So let's look at a couple of divergences. So if I see that, do y'all see a point where the market, again, now this isn't against the trend in this case, but it shows exhaustion. Okay, so let's look at this. Right here to right here. So the market made a big push down on volume. Okay. And then it made another push down on volume. Do y'all see how it didn't have as much strength on this last push down? Ignoring everything else, just looking right at this, not worrying about anything else on the chart. Just right here in this little zone. Can everybody see how volume pushed down and it pushed down again, but it was weaker? And we made a lower low on less volume. So, yes, exactly, John. Okay? And then it goes green. Now that is a buy signal, except for I have a problem. What's my problem? Why can't I buy right here? Even though this would have been like the perfect time to buy. Why can't I buy? What gets you from buying on this when it turns green? Batty is still red. Okay? You're like, man, but that would have been like buying at the low. Well, yeah, so what if you would have bought on this one? Eesh, that would have been pretty, right? So don't just look at the, oh, that would have worked. Look at, oh, that wouldn't have worked. Okay? Oh, that wouldn't have worked. So Batty's keeping me. But I still have a divergence. So, I'm keeping that in mind. So I am, as soon as I see that green, I'm looking back to see, is there a divergence? There is. So as soon as this bar closes, because I got to wait for that bar to close for it to even show up. You'll notice like it doesn't show up on a live bar. We make sure the bar closes first. So when could I enter based on this? Because this just told me the market got extremely exhausted. But I need something to tell me I can go long. What do I need to tell me I can go long? Using just VAD. What's a requirement? VAD-E. So this VAD-E, this bar closes. It's green. Can I go long? Do I have a divergence with a long trend? Yes, I can take that right there. So when I make it break the high, by 2 to 3 ticks, it's sort of depending upon what market I'm trading. So I really enter on this bar, right? Because that bar has to close, then the VAD populates. Boom, it's green. Okay, I can take it. So as soon as that bar closes, I'm like, is there a divergence? Okay, that's one of the first things I'll do when VAD changes direction. All right. Now maybe I missed that one. Okay. Let's look. Is there another VAD? Now remember, I'm looking at reds on my green trend here. Okay. That one lower than that one. So the market pushed down right here. Yes, it had less volume, so we had more volume on this push down than we have this push down. So basically we had a double, which is pretty cool, a double divergence. Okay? And you probably heard a lot about divergent signals, and I found that most divergent signals are honestly pretty worthless. They're a lot of times 50-50. Okay? Because markets can diverge for a long time. But when you put these two things together and you combine volume with trend, divergence is very, very powerful. My favorite divergence signal that exists, period. Okay? And it's such a simple concept. But, we invented this, we put it together, and like I said, made all the different formulas to, measure trends. And if you're trying to figure out how to add the VAD-E indicator and the VAD-A indicator, all you do is right click up here outside of his, indicator. You got to click somewhere. And then knows the quick keys. And I don't know why, but I've never learned to know them for everything else. But you're going to go over to your VAD indicator. And where you're going to find that is right here. Use the version 2. Okay, so you're going to find Apex Diagnostic Volume Accumulation Distribution V2. double click that and it'll add it. Okay. And then over here, you can choose mode A, B, C, D, E. We found that mode A and E is what seems to work best. Okay. If you want to play with it, feel free, but that's what we use. I don't really change anything else. Okay. So mode A, and then mode E is right here. And then to make it say VAD A and VAD E, I just go to the label section under visual. And I type in VAD E. Otherwise, it'll say volume accumulation distribution with this long name, and I won't know if it's A or E or whatever. So just to help me keep it straight, I relabel it. Is that you got that, Joyce? Okay, I'm gonna assume you got it. If you don't have it, let me know. Okay, Joyce? But right-click indicator, volume accumulation distribution. Yes, I add it 2 times. So I actually go up here and I add it twice. And then I change 1 to mode E, the bottom one, like the second one, okay? And then I'd label that VAD E. If that's on VAD A, I change the label just so I know what I'm looking at. To VAD A. Cool. All right. Another question came up. How did you get the numbers to show up on your volume? It'd be different on every mouse, but what I use is I push down my mouse scroll wheel. So right there. Matthew, do you have a mouse scroll wheel on your mouse? The wheel for, going up and down like on web pages and stuff like that? Awesome. Yeah. So a lot of times when you want to see a setting of an indicator, like if I go up here, it'll tell me the actual measurement of every indicator on every bar that I have on that chart. So pretty cool. It's also how you change like layers. Like you can click on an indicator and scroll it, and you can make an indicator go behind another indicator. Okay, so I'm trying to make sure I answer base questions so far. So yeah, so we have another entry right here when the bar closes, 1045 entry, that is correct. So we could put like a little, just to be a little clearer. Basically, we got a buy signal, close of that bar. We got a buy signal, close of that bar. Okay, what about when I see the orange and blue? One, I'm careful about overthinking the orange and blue, okay? They are a measurement of chop expectation, okay? So when the blue and the orange come up, it means that the market is expecting, like we're expecting a reversal. If we don't already have it, okay? So, and you'll usually see that happen right before the market reverses. Not always, but you'll usually see it happen. You'll see the market oscillating in the opposite direction, and that's sort of it's sort of a cool little heads up that it's probably about to change. So, or that you're just watching, like I said, a lot of chop. So, I mean, you can look at this one right here. The short one, it's just there's a lot of blue, So I wouldn't get overly excited. There's not a bad divergence in green anyway because it has to. But So basically, it shows me chop. The more of it I have, the more chop I have. If I'm seeing that right there, I'm like, I think I may wait. I think we're just gonna be bouncing off the half deviation level. Right here we're going short. I mean, that looks like, okay, short, short. Not really picking up any steam. See, the volume isn't growing. Like, see how over here, see how the red volume is growing? Like, we're not getting any kind of push. And finally, we start getting a push, but it's actually in the opposite direction right there, saying, hey, we're in chop. Oh, nope, we're no long trend. So it sort of alerts me to chop. It makes me aware that the trend may be changing or that we're flat. It's not. So it's a bit subjective. It's more of a be aware sign, not a don't take a trade sign. The one time I would be very cautious about taking one is when I see just a whole lot of chop color. That would cause me concern right there for trying to go short. Because I mean, I have more chop than I have, trend. And that's not a perfect like objective answer, but the number one thing you're going to see on it usually is you're going to see it right before the trend changes. So, and you may see it, I mean, in between we see it right here, and see how the market's just sort of oscillating a little bit, but, just light volume, and not really the strongest trend. When we had all that little bitty chop in there, and that it really was more of a chop market. We got a little down, then we got a little up. Finally, we had a little stretch, and then flipped. But it does give you a heads up that the market's either about to go into chop or change direction. So I hope that is a satisfactory answer, Chris. Got it. Okay, cool. Yeah, if you go down here, so I got to click down here. I can say VAD-E, and then I can hold my wheel, and it'll show me the volume as it's accumulating or distributing. Accumulating being buying, distributing being selling in the little window. Is there a certain volume you're looking for on VAD-E? Nope. Because, I mean, if you think about this, we took this trade as soon as that thing turned around. Okay? So if I waited on the volume, well, then, the trend would be already there. So what this is telling me is it's less about how much volume, like, this is more about the trend than it is about the volume right here, I guess is the best way to put it. This up here is a little bit more about the volume in the sense of, we're looking for that divergence in the market. And let's see, we have another one. And sometimes this can be hard to spot. Now, I will tell you my favorite divergences are big ones. Like that right there. I really like that signal when that happens, okay? The little ones make me a little more nervous because they're usually not moving as fast. That's what it means. There's less volume in the market. It's like you can see, we have a lot low. See how the volume dropped? That's an expectation of volume right there. And we're really low on volume. But a signal is still a signal, So right there to right there is another divergence, which gives us another buy when that bar closes. So right here, that bar closed, the buy 2 ticks above, there's a trade. Simple trade like this, like say you're trading 20-minute, I wouldn't even say 20 because I have hourly bars on here. Say you're trading binaries that have at least an hour to expiration, put it that way, okay? Because that way you have time for the market to move. And, you buy it, you could buy like slightly out of the money, like 30 bucks, 25 bucks. And, with it, having room to hit that target. So I would look at the, levels Mike. You asked about binaries. So like I get this signal here. It says go long here. Then I'm probably going to be looking to buy. Like this is at what 56.27. I'd be looking at like 56.32. So maybe I can get that for 30 or 40 bucks. Goes up. If I can get out at a 1-to-1, 100% return, that'd be a cool way to do it. Obviously spreads, do a near the market daily spread. And now right here, here's a question, good question for you. Let's say I take this signal. Where is my stop loss? Because like MVP hasn't flipped, so I don't got my predictor or my MVP line. What is an objective level I can use for my stop loss? Swing low is a great stop loss, okay, because it actually is based on a price point. I like that. That's a very good answer. It's like right here. So yes, that's probably one of the best answers. I'm really impressed y'all came up with that. So very good. Matthew, Osmond, Marion, all good. So because I mean, that's where the market decided it was, no longer going to fill orders to the downside. If you wanted a tighter one, yeah, Ezra, that is right. You could also tighten it up to the trend flow line. Right there. So if you wanted to lower your risk, don't make trading about winning and losing. Okay, make it about trading well. Okay, again, make it about trading well. Yeah, I mean, if it's time to get out of the trade. I mean, the worst trades I've ever had are the ones that I wanted to be right. I didn't want to lose. I could have lost $15, maybe it's $150 from how many contracts I'm trading or whatever, But no, I lost, 500 because I wanted to be right. So before you get to enter that go button, you have to decide and you have to stick to. Have to, not optional. Where your stop's going to be. Your worst case stop. Okay, you got to know that number. Like I am going to get out if it goes against me here, period. Okay? Don't enter a trade without knowing where you're going to get out, ever. If you want to be a losing trader, that's the way to do it. I promise you. Okay? If I enter a trade, I expect the market to oscillate. Probably almost every time I get in a trade, the market will go a couple ticks against me. It just likes to do that. It has that habit of, like to jack with your emotions. I mean, like right here, you get in, it finally breaks 2 ticks right here. And then it oscillates down, does this. I mean, you're suffering through this for 30 minutes. Going against you, going to 40, going against you, you just want to hop out of the trade. And then takes off. So, follow your plan. So I like my favorite trailing stop when it kicks in is predictor, the predictor arrows. Okay, it has to close below it. This is the way I use it. Close below it. And then if it closes below those little predictor arrows, let me zoom in. I know they're not super easy to see, but the MVP predictor arrows, yeah, if it closes below it, then I put these little bitty ones, the ones that are on every bar. And I'll put a stop 3 ticks below. That's my favorite trailing stop. And if I get stopped out, I'll get ready to get in on the next trade. It may turn around and go right back again, and I'll be ready to hop back in. So like I might have been knocked out over here, I'm not sure, but this happened, and then boom, I got another entry, and I'm in again. So not below but the little bitty arrows, if it closes, so a bar has to close below the arrow. And if it does, I'll put it 3 ticks below that bar. Does that make sense, Matthew? The predictor arrows, the triangles. That's my favorite one to use. One of the things I said yesterday is my worst case, if I'm ever like, you get that little opinion about, no, this thing can go. I know it can go. It's going to go. My other charts say it's going to go. Then my worst case stop loss is the MVP line, that line right there. Okay, so if I don't want to use a predictor, if I'm like, man, I really think this thing could take off, then this is my worst case stop loss. Okay. So have a worst case stop loss, know your stop loss when you begin, and have a plan for trailing. So like right now, I'd be like, let's say you get in this trade, just keeping your stop, you're moving it up. Now you can decide at this point if you want to move it back down to give the market a little room to breathe. Okay. And then you're moving it up, moving it up, moving it up, moving it up. Yes, you will give some money back on your trades when you get stopped out. But if you get stopped out too quick, you won't ever catch the trades. So you got to sort of, it's about if you manage your risk and if you allow your trades to run by trailing your stops, then you catch the big ones that cover the small losses. So, and I know some people that will literally wait until this changes. They'll wait till VAD E changes before they get out. I, that could be something to consider. I honestly haven't used that completely as a trailing stop, but that is, an option. Like VAD E changed, boom, I'm out. Like you're going short, you're going short. And I mean, an advantage would be like we didn't wait for it to hit this high, right? Now, another stop that should be for you is if you get a signal in the opposite direction of your trade, do you think you might want to get out of that trade and go the other way? Like say you're short in this trade and you're trailing. Okay, look at this because this, it really is very applicable. So let's say we took a short back here, let's just assume there was some sort of, reason to do it. Okay, we'll just say trend catcher or whatever. Okay, went in the trade. We're trailing with MVP predictor arrows. Trailing, 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 trailing. Sort of interesting, right? There's our MVP predictor, which means we set our stop 3 ticks above it, and lo and behold, there's also a VAD with a VAD A divergence to go along. So even if I had my worst case stop loss up here, would it maybe be wise to go ahead and get out of the trade and take the opposite direction? There's so many times I've stayed in trades, and then I'm like, oh my gosh, why didn't I just get out and go the other way? I had clear signals to go the other way. Anybody else been like that before? Like you're holding on to a trade and you're like, you wanted it to work. Am I the only one? Okay, I'm not the only one. So, it's like, you're like, oh man, I had a long there. I had an apex long there. I had another divergence there. And I just stayed in the trade. And I got in over here. And now I'm flat. So when you see a signal to buy and you're selling and short, go, get out of the short. Vice versa. That's an exit signal. So yeah, the reverse button there's a reverse button on the DOM. You can go in and you can click it, and you can literally it'll make you go from long to short. So if you're long one, it'll sell two, so you'll be short one. It's a very quick way to go in. I only would use that if the market was moving really fast. Otherwise, I would just exit and then set my trade up. Nervous taking trades near the highs or low of the day. I guess I am. I'm aware of it, but highs and lows of days are broken all day long, right? If you sort of think about it, like the high of the day and low of the day, have been broken a ton of times. So if you have it on your chart, Like it gets broken all day long. So, I don't give it too much. I mean, it's good to be aware of it. I mean, it's one of those good things that I don't have it on this chart, but I have it on my C's chart. But right there, it's tracking the low of the day. But I mean, the low of the day was broken, 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 broken. You know, so sort of just expect them to get broken. But I mean, make sure you have a solid signal. Yeah, I mean, if it's going to break any level, I'm looking for something specific. I mean, this trade right here, I mean, we're right at settlement. That's the strongest deviation level that we have. Okay? And I'm buying like right at it and green ice. I mean, talk about a nervous trade. But the signal said go long. And either you're going to follow your system or you're not going to follow your system. When you try to cherry pick your entries, you will pick the bad ones. Who agrees with that statement? Is cherry picking your entries, when you have all these entries that line up, does cherry picking them work for you? So y'all agree with the statement cherry picking doesn't work? Is that correct? So I'm getting a lot of people saying right now, I agree, I agree, I agree. No, it doesn't work. The Dan's like, you must watch me trade. Um, it worked once in '87. So it's almost like the ones you want to cherry pick are the trades you should do the opposite on. It's the ones that you don't think are going to work are the ones that work. But uh, Mark Douglas, Trading in the Zone. If you haven't read it, required reading. Okay, I mean required reading. If you want to be a profitable trader, and by the way, buy it. Don't find some bootleg copy. Okay, the guy is an awesome guy. He passed away last year, and the royalties go to his widow, his wife. Okay, so please buy the book. You can buy it on Android's, bookstore. You can buy it on iTunes. You can buy it on Kindle. You can buy it at Barnes and Noble. Whatever. And but one of the things he talks about is, you just take your trades. I mean, I don't hesitate. If I hesitate, I'm going to be a bad trader. Bad losing traders hesitate. They always like, you just have to either you trust your system or you don't. Either it works or it doesn't. You know, and if it doesn't, then you go back to the drawing board. You get help. But and the thing is, you cherry pick them, and then what happens is, since you cherry picked it, it's now your opinion. It's not the system. And so you don't want it to lose, so you let the loser go even further. And when it's finally in profit, you close it out really quick because you're so happy you were right. Does that sound right? When you cherry pick a trade, you don't want it to lose, so you let it go a lot further than it should. And when it's finally in green, you're so happy you'll take a small profit just so you can feel good about your choice. And you have no way to measure whether a system works because you're messing it up. Whether it's Apex or anything else. As you become emotionally involved, that's perfectly said, Chris, you become emotionally involved when you cherry pick your trades. And one of the worst things that could happen to a trader is to break their rules and make money because it reinforces really bad habits. Yeah, just like what Mike just said. Yeah. So I did it on NQ this morning. Yeah. So there's an example. A system means I'm going to follow these rules. I can't measure whether anything works if I'm trading from my gut. These guys are going, I just trade from the bars and from the gut and how I watch it. And I think indicators make you weak and da 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 da. Bad money management, bad system following, indicators that aren't written properly, those make you weak. But I mean, indicators are tools. It's like telling a carpenter you shouldn't have to use tools. You should just be able to grind it out with your hands. Um, I mean, I can trade without a lot of this stuff on here. My goal of doing this is one to make myself more consistent as a trader. When I started before Apex became Apex, I what I was doing was I was recording videos for my daughter. So she was just bored. I wanted to make sure she didn't have to go through what I went through. And so I started recording stuff. And one of my friends out in California, Gates, talked me into putting stuff up. I'm like, who's going to listen to me? He's like, a lot of people because like you make money trading. So most people buy all this crap, and from people who aren't even making money. And so he like built me a website, and we put it up, and I was like, oh wow, we got like 50 users. Oh, we got 100 users. Now we got like 20,000. It's just. But it took me a lot of. I lost my account multiple times because I didn't have good money management, which means I didn't plan my stops and my trails for exit before I got in, or my targets. You can also use targets, but I mean, you definitely want to use stops and trails, and you can use targets. Like I'm targeting, say, the 0.5 deviation, whatever. Um, or like what we talked about yesterday about looking where to get out of the trade. And because I traded too large of a size. And then the other reason was because I traded a lot from my gut. Remember my wife asking me, can you show me how to do that? And I was like, no, I just sort of do it. That's not a good sign. Because how do you know you're even doing what you did yesterday? So just as a trader, I mean, you need to have some objectivity, to your. Now you can have multiple systems to give you more signals, but to help out with that, we all have that problem of being impatient, right? So, you know, having the ability to take VAT entries and iZone entries and, you know, C's entries and order print entries, um, range boomerang entries. Like this right here is I don't know if y'all know, but like it's called a boomerang entry. It basically comes down, just about reaches its expected range. That's what the box is how far it expects it to go, either up or down. And we would expect a reversal off this. And we got it a little bit late, but it pretty much went to the low of that expected range and then started going right back up. This one isn't expected to go much further than this height right here during this hour of the day for this market. All these expected range boxes are based upon that specific instrument, that symbol, okay, for that hour of the day on that day of the week. So, I mean, they're specific to Monday, Tuesday, Wednesday, Thursday, Friday, Sunday, and to the specific hour and to the specific instrument. So don't cherry pick your trades. Find rules, set stops. Don't trade too large. That's another reason you stay in a trade too long is you like, I can't lose all this money, right? Or, ooh, I had a lot of contracts on that I probably shouldn't have had on, and I'm up like it looks like a lot because I put on a lot of contracts, but really not up that much. But I'm gonna take it because I'm really nervous because I have so many contracts. If you're nervous, you're trading with too much size. So just slow down, and it compounds a lot faster when you're not trading poorly. Let's see here. Okay, now I have one that talked about. I'm gonna go through a couple other questions here. I think I got 3 questions. Chart trader versus DOM trader. I use the DOM personally. Chart trader is really cool. Okay, I think it's an awesome feature of Ninja. But there are things that I can see on the DOM that I'm not going to see on the chart. And I was taught old school to use the DOM by the guy that trained me. That basically taught me how to trade. So up in New York, I mean, I went to their big skyscrapers and paid them a lot of money. And John Netto was one of the guys, and so he set me down in front of his account, after he taught me, how to scalp, and he was like, "Go," and I'm like, "Seriously? This is like your account?" He's like, "Yeah, go." And did what he said, and I went and I made him. I don't know, like I want to say a couple grand in 15, 20 minutes. And he's like, "Awesome." Step away from my computer, and I'm paying for lunch. I'm like, "Is that all I get?" He's like, "Yep, it was my money, my risk. You get lunch." But this taught me to read the DOM, and I learned a lot from that. So, and that's a lot of where I learned to read volume and things of that sort. So here is a DOM, static DOM. You go to File, New DOM, and then you can see what I can see right here is orders in the market. So, and I'll place and then you just drag and move them. So if you want to learn some really cool stuff, now again, Mark Douglas, required reading. If you want your mind blown away, then buy, static is much better than dynamic. Buy this book. Did it paste? There we go. The Protein Trader, I'll show you. Now you can also buy it on iTunes. So it's not on Android, unfortunately, because they want like 50% or something like that. Um, but anyways, this book is like, I'm in it. I have a whole section about deviations of the market. These are good traders, real traders that actually make money. So the only guys he put in here are guys who actually probable that have 1099s to prove it. He actually lists in his book. Let me see if I can find maybe on. Good Lord. Okay, hold on a second. I gotta close all these stupid things out. Uh, okay. 2 years ago, that's my daughter running polls. She was just starting. All right, let's see here. Let's go to. Trying to see if I put all the pictures up here. Well, anyways, in the opening of his book, he actually lists out third-party accounting review of his trading from the last 5 years, like showing that he's profitable. So, pretty cool guy. Um, he taught me. I think I learned from like back in 2008, like 8 years ago. But we still meet up like in New York and Vegas and stuff. So, Um, but that's like a heavy. If you want to have meat, I mean, it's going to take you months to go through the book because you read it and you just got to think on it. But you'll learn like just some really cool insights. So, the global macro edge. That's what it's called. Ezra, you have it. Yeah. So tons of knowledge in the book. Like it's just, I mean, it's probably one of, if the best books out there. Um, I'd probably put it in the top five. So let's see here. But yeah, I like to trade from the DOM. That's just my personal preference. There's really nothing wrong with your one. I mean, you're getting a lot of that data on. What you're not getting on OP is you're not getting um, limit orders that haven't been filled yet. Does that make sense? Because order prints is about orders that have been filled. So this is about orders that haven't been filled. So you can see the depth. The books, if you actually search trading books in the forum, you'll see a list of books. I actually need to add Global Macro Edge probably to that list. But I have like top trading movies and books and all that right there. And it says respected resources and books. But there's One Shot, One Kill Trading, which is a cool book. Protein Trader, now Global Macro Edge. Timing the Trade by Tommy O'Brien. I learned some cool volume stuff on that one. Trade What You See by Larry Pizzovetto is a good one. Alexander Ellis Traded for a Living. I like the psychology stuff in that book. I'm not as big on his methods. Um, I got like the Stock Trader Almanacs. So those are the ones that I've listed on there. And there's other books that other traders have listed too. Okay, so we'll get that out of the way for the moment. But yeah, it's like all these are working. Um, you can just go to the Ninja Trader support section and it has videos on the DOM. Let's see, on our website, let's see if we have that link. Let's see here. So right here under helpful links. Okay. Shrink my screen a little bit. With Control Plus and Control Minus, you can shrink your screen or make it go. And Control 0 puts it back to normal. Oh, there it is, the help guide. Okay, so under Elite Education, Ninja Trader, very last one, okay, is the help guide. So you can go over here, you can click search, you can type in DOM, and Super DOM, submitting orders, modifying orders, action buttons, all that stuff. And you can go in, and it has videos, like on how to use the DOM. So if you want to learn how to use the DOM or anything else in Ninja, just go to ninjatrader.com/support/help guide/NT7, or just use the link under helpful links, Ninja Trader. It's an easy way to get there. It's on YouTube, John. So he's looking for the video I did, the video I spoke of yesterday. I highly recommend that you do have a Facebook account. I understand wanting to stay off the grid and not posting anything, but to be able to follow stuff and keep up with stuff, I highly recommend. So like my mom was like, I don't want to be all over Facebook and da da da. I don't want all my business out there. You don't have to post anything, but you can follow things. It's very helpful. Like I post stuff up on Facebook all the time. So if you're not watching it, a lot of times you'll miss out on some stuff. That's really the only way we can communicate without email bombarding everybody constantly. Let's see here. Let's just go to. I'm gonna go to Facebook because we just post, also we did is post the YouTube link. You actually probably can go to our Facebook page and find it without even being signed in because it's a public page. There it is. There you go, Dan. How the market really works. I put work instead of works. That might be why you couldn't find it. Oh, how the markets really work. Okay, no, that's, yeah. There we go. Let's do some stuff from this morning. Okay. Still going. Okay, deviation indicator. Somebody's been, who asked the question about deviations? Very patient. How should you be managing your NASDAQ trade right now? I'd be trailing it with the, what I do is I trail with the predictors, arrows. So make sure you are trailing your stop. So we had a lot of volume. I had a big volume punch through right there. Didn't really show up on the 10-minute chart. For that bar, that was a lot of volume. And it punched through that high of the day. Maybe the high period. Maybe I did like an all-time high at this point. Yeah, so definitely be trailing it up. But that was a lot of volume. This was all the breakout traders hopping in right there trying to buy the new high. There's also some people selling off. But volume, like live volume, is starting to, looks like it might pick up. We'll see. This is going to be a hard point right here, just because of this seeing that volume go from that low to that high that fast. So make sure you have it trailed. Hey, Ann, what's up? All right, question about deviation indicators. So let's go about the go to the deviation indicator. Okay, what we use on deviations. I don't really use yesterday's deviation, though you can use it. Some people like looking at them. So not something I've had the practice of doing. Doesn't mean there's not, solid merit to it. Okay. It's just there's only so many things I can look at. I'm just sort of sharing with you what I look at. Deviation indicator is how far the market expects the market to move. What we do is we actually take what's called the implied volatility out of the options market. We use 4 different options contracts, pull out the implied volatility, and implied means expected, volatility means movement. So this is where people are putting their money where their mouth is. It's the pricing of calls and puts on the NASDAQ. Okay. And we use that implied volatility number to say how far, can the market move? today? What is the expected? And so what this means is like a one deviation move means that, just without getting like down to decimals, basically means 70% of the time the market will not move more than one deviation. There's like a 30% chance it'll exceed one deviation. Two deviations is like a 95. Like there's only 5% chance it would exceed two deviations. And there's only like a 0.5% chance it'll exceed three deviations. So we know we hit the one deviation move, we're really starting to get to a point where, probabilities are going down. But there are big days. I mean, if everything's flowing, it doesn't mean you can't take the trade, but you want to be aware, again, of that deviation level. And you should expect to have resistance every time you hit one of these levels. Okay? We have a really low volume day today because Fed funds is tomorrow, but we are still getting, a little trend right there. So, I mean, it's like, what is that, almost 20 points. So, I mean, not bad at $20 a point. That's $400 on one contract. So, but that is the expected move. Now we have also down here, we have this sub deviation indicator. This is measuring from the high to the low. Okay. So when it's green, that's like how far has it come down from the high? When it's red, that's how far has it went up from the low? And then it puts the number over here. You can actually see it. And then the blue line, it maintains the highest point it's been for the day. So because it may like draw back down. So the blue is the highest point it's been all day long, that blue line. Okay? So notice how it went up a little higher and then ticked down a couple points. And so now the deviation indicator is lower. Marriott has some very cool lessons that she teaches about how, this stair steps and how she uses it. So you watch Marilyn's World, you'll learn a lot about that. She can teach you about that. But the original intended use, and we use our indicators in a lot of ways that we didn't intend to use them, but the original intended use of this indicator is to let me know if the market has moved down, let's say like 0.2 and up 0.8, so like negative 0.2 and up positive 0.8, it's moved a deviation. So it's sort of like having like a deviation line like right in the middle by being aware of when this hits a 1 deviation level. Okay? But it's not standard deviation. Standard deviation uses historical movement for its calculation. Standard deviation is pretty worthless. I mean, think about the number one disclaimer. Past performance is not indicative of future performance. Okay? Which meaning standard deviation means absolutely nothing. And I remember Bernanke saying, yeah, the statistical standard deviation model is broken in 2008. It's like, well, yeah, past doesn't predict future. But what does predict future is taking a poll of every single person in the market and how much they're willing to pay for an option. That means how much do they think that market's going to move. And the more they're willing to pay, the further the market's going to move is the expectation. Okay? And so these deviation levels will change based on basically how people price the market as a whole. So it's pretty cool. It's like, I mean, literally the best poll you can get. And when we're not on a flat zone like we are today, usually we do hit those 1 deviation marks. So 1 deviation levels. You see this black line is a deviation. That day we hit it, that day we came pretty close, that day we hit it, that day we hit it, that day we hit it and exceeded it a little bit. There's a day, we're not even close to it yet, but you can, when backing out, I can see, I can scroll back and I can actually see, how often we come close to hitting just the 1 deviation level. So it's a very helpful indicator to what it does. I guess a way to put it, my favorite thing about it is it puts a market in perspective. You know how big like a bar can seem, like depending upon the zoom. It can seem like a massive trend. If I go in here and I grab, what is it, like the candy icon or something. Yeah. I zoom in just like on that. If I drag everything down and if I got all the stuff down and everything, I could make this look like some massive, huge trend, right? I mean, it was a decent move, but, it wasn't it was, an oscillation in the day, right? So what deviations do is they give me perspective of how far has the market really moved, how far does the market expect the market to move. And without it, it's like I really have no perspective of the chart. The bars can, small bars can seem big, big bars can seem small, all depending upon what happens on the zoom rate on your chart. So this helps me keep everything in proximity. And as don't algos work models built around 2 and 3 deviation moves? Risk measurement by the top brokerage firms like Thinkorswim, TD Ameritrade, they base their risk model on a 2 implied deviation move. So that's basically where they know that they need to take massive caution on traders, and that's how they help set their margins and things like that. So 2 deviation moves are basically that's really the most they expect in any given day, because it's 95% of expected movement. And then, of course, a lot of algos know what the expected movements are, because they're also using this intelligence that most traders never think about the statistical movement of markets. Like, they have all these indicators that are measuring this and this and that. But one thing we add on here is we make statistics easy. We go, hey, here is the statistical range of a market. Here's the range of this hour. We say, here is the statistical expectation of volume. Like, you don't know it, but you're looking at all of these statistics. And most traders don't have any statistics. They have no expectations. Like, was that a big move for that hour or a small move for that hour? Was that a lot of volume or was that not a lot of volume? I mean, how can you tell without knowing what the expectation is for movement in that hour, movement on the volume, and movement on the day? And I tell people, diagnostic trading. You see the word diagnostic everywhere. It means that you look at how other traders look at the market to be one step ahead of them. We talked about that yesterday, about the 4 steps. The 4th step is about how to be ahead. And but the 4 things of diagnostic trading are statistics, fundamentals, technicals, and seasonals. So statistics, I mean, we talked about that. Fundamentals, that'd be like being aware of news. Technicals, obviously, we got that on the chart here. And then seasonals is, just when we expect it, like earnings are coming out, or at this time of day, the market moves this hour, or the day before a holiday, or the day before Fed funds rate. That's like a seasonal expectation. Yeah. So margin call, very good movie. But yeah, the deviation levels, that's like when they know that they're about to be in big trouble when they get near that 2 deviation move against them. Yep, those are the 4 aspects of diagnostic trading. Statistics, fundamentals, technicals, and seasonals. Once you put the order in on the DOM, it'll also show up on the chart, and then I will trail a lot of times on the chart, So yeah, you just don't cancel it. I mean, just pick it up and drag it, drag it, drag it. It's not it is, so I guess in that sense it is by hand. You can put a trailing stop in, but it's not going to be based on the indicator itself. It'd just be based on being so far away. So you can adjust it, but then on the next bar when it closes, it's going to readjust it to that trail that you set. All right, let's see here. Did I answer? I'm trying to find the name. Sorry, I know I said it a second ago. Did I cover you on deviations? Any more questions on that? All right, got it covered. Okay. The main thing I like about volume in O'Brien's book, that's the guy, one of the guys I do the radio show with on Mondays and Fridays, sometimes when I can. Basically, I'm part of the show, but whenever I have family things and I can't be there. But he really talks about the volume patterns, and I don't get as into it as he gets into it. I took away the big lessons about like the spikes and the drops, and it helped me. It opened my eyes to volume. So trading's about to happen. I haven't read it. I don't think. I don't know. I've read so many books. I may have read that one. I mean, I have like 300 books over here. I'd have a little library checkout thing. But let's see here. Institutional ranges question. This was, by the way, a Lori developed indicator. I think that's right. Yeah, there are so many different systems we can teach you on one chart. I try not to overwhelm. Let's see here. All right, I got a question. What do I think about divergence on this chart? So you're looking at a long, man, you got some crazy colors going on. You're looking at a long, let me grab this so I can just write on it. So you got your up on your VAD. Oh, yeah. Okay, that's your VAD. E. That's not a divergence. This might be a divergence if we close up again. So right there. So it's a possible divergence, but it's not one because until you get that up close. You get the up close, it's a divergence, and if it breaks the high, you got an entry. Okay, let's see here. Yeah, they keep trying to get me to write a book, and we keep talking about it, but I think I finally figured out how I want to write it. I'm gonna, because I'm like, the big thing is I don't want to write a boring trading book. So I think I'm going to make it about, like, I'm going to give examples about horses and riding horses, and then how that applies to trading. So it actually has some interesting visuals going along with it, because there's so much that is like, if you want to win the barrel race, you can't look at the clock. You can't look at, it's like you can't look at your profit. You have to focus on what's right in front of you. You have to do the same thing every time. You have to practice, practice, practice. I mean, there's thousands of lessons. Not horse trading, but horse riding. Like my daughter, like we do rodeo, and there's a lot of crossover on the psychology of trading, especially. And so just sort of bringing some of those aspects together to make it an interesting read. I'm just trying to figure out how to make it interesting. Like I can put a lot of content on there, but so many books put you to sleep. So I don't want to write one. I am trying to trade a horse right now that I'm trying to sell. It's a really good horse. He's fast. Just him and my daughter are not a perfect match. So Dan, I sent my dog on Facebook so I can check Apex. There you go. Okay, I thought I added the indicator. Hey Lori, are you around? Yeah, we have another um, title, but that will get people's attention, but it might be a bit inappropriate, so I'm not sure. Do y'all want to hear the title? Maybe I can get a vote on what y'all think. If y'all think it's funny. It's not meant to be disrespectful in any way to women. Okay, my wife actually came up with the acronym, but the title that we came up with for the book was "Make the Market Your Bitch," and bitch is an acronym that stands for Bringing in the Cash Hourly. So I figured that would get people's attention. Do y'all, I mean, would that be appropriate, or would people be like turned off by it? I mean, I'm a Christian guy, you know, and all that, but it's just sort of funny. Yeah, see, everybody likes it. Everybody laughs. The largest demographic is Generation Y. They're bigger than traditional range. I think just there we go. Nope. Yeah, you know, I'm not big on swearing and cursing and everything else, but it's just such a good idea. Like I need some snappy title like that. Few prison readers. That's horrible. I hope you didn't record that, Tony. I bet you did. You better cut that part out. Maybe I could write it under a ghostwriter. Work. Put Tony's name on it. Yeah, I think the publisher would go with it. By the way, this is Tony using a mic that uses a Darrell voiceover. Okay, let's see here. What have I not covered? Please ask me again. See, I got like a 50-50. I got a laugh from every single person. But then, like, the same people that laughed said I think turned off. So, I mean, like, if you saw that in Barnes & Noble, I mean, would you pick it up? And would you buy it? Now, if I led with like a preface saying, I have the utmost respect for women. I was raised by a single mom and two aunts, and I have a daughter and a lovely wife that I've been married to for 13 years. This acronym is not meant to be used in a disrespectful manner, just to have a little fun and trading, to get your attention and make this a less boring book. Would that help? She did think of it. My wife did think of it. That has to do with anything. Well, then I need a better title. It's not going to be done. I might melt some snowflakes with it. That's true. Well, it'd be big periods between the letters, like B period, I period, T period, C period, H period. So like it would be like it'd sort of stand out as okay, what does that stand for right away? By putting the periods on there, and then underneath it we would say bringing in the cash hourly. I think it's the same thing, whether you put a space or not. In today's world, you got to be apologetic everywhere. Yeah, I don't know. It's been one of those things that I've struggled with. Now John's telling me this is why we don't let you in the elite room. Because I'm actually not swearing. It just happens to be a swear word. It's really make the market your BITCH. All right, next topic. Some people are like, yes. Some are like, no. They sell it in my church. I don't know if they sell any kind of trading books. They do have some like financial savings and stuff like that books. Yeah, John. Oh crap! Parents showed up. John, you can just leave the room now. Let's see here. How do I? I know you're an admin, but I ought to be able to somehow. There we go. I just kicked John out. um, he's like, "Don't you dare." Okay. You can log right back in. We're like, okay, well, that means I'm not working for the day, so see you. Okay, explain seasonality to me among the currency futures. Again, I would take, yeah, you got sort of your fundamental seasonality, but really I would just use the daily. We can get like real big into seasonality on currencies about their longer trends, but I'm trading much shorter trends. I'm sure I'm getting like cursed out in Skype right now. But I'd just be like the seasonality I'd be looking at is what time of day does the market move for that currency and where's the most volume at. That'll help you know like when to trade that specific currency, when it moves, that type thing. So that's about all there is to it. I mean, I don't, I, you can get really deep into seasonality, but unless you're trading longer term, then I'm just looking at expected moves. Um, just wait to log back in, see what he's gonna say. Hey, Laura, you're here. Institutional range Is it having a bug? I know, I'm trying to add it to my, oh, the institutional range indicator right there. Try it again, see if it'll plot. No, it's right there. I mean, I got it, but it seems to be messing up. Oh, that's probably why it's killing it. Okay. Oh, it's right there. There it is. Okay. Institutional range. I got it. It's loaded. Didn't have a bug. I just messed up. Okay. So, these orange lines right here, okay, which are a deviation. Let's see if it has the scroll thing feature built in. And we can go into it. That won't let me go into it. I can go to the indicators. See if the scroll. Turn that on. It'll basically give you the range and a trend of the like the 70% range of a trend expectation. Like there's only a 30% chance it'll go outside that range. So that's right there. It's that orange line. Again, let me change this back to white. You see a post by John that says, "I hate you." You can come back in now. All right. Yeah, so you can put it on any chart you want to, 5-minute charts. But I know Lori, like, she developed that, and so if she likes it on 5 minutes, then I would go where she likes it. Okay, are your entries mainly based on VAD divergence? I noticed that your trend catcher set to 7 and set to 15 is wondering came from the TC arrows. You remember lines up with the other signals. Well, if you remember on trend catcher, it doesn't have to happen like right at the moment. It's trend catcher. The arrow is the actual final piece that has to happen. So I mean, there's a trend catcher short right there, Kelly. Okay, so we got a trend catcher short, and I mean we can take that. You know, trend flips, flip, trend catchers flipped. So not freezing on my chart. I got it on continuum charts. See? Maybe it's a resource issue. I got, a lot of processors in them. So some is special. Okay. Anyways, it does work there, but not for everyone apparently. No, I mean I'm just teaching like the entries on VAD because that was the main question that came up today. But I mean I'll take the chop entries, I'll take the iZone entries, I'll take VAD entries. Like I don't have to have VAD lining up to take an iZone entry, you know. Um, so I know I have several charts open, but if you want me to, I'll change this over for you. Here we go. We'll change it to, if you don't know how to do it, continuum bars 3, 12, 60. Yes, I trade a lot of Nadex. That's an accurate statement. A lot. The iZone breakout, as long as you have that volume confirming it, then, like everything winding up, yeah. And remember, I set my iZones to 20, so I have a lot less zones. Let me change this. That. This one's the one to change. Makes it easier to see the zones. Is the proximity to strong levels like settlement in a way baked into VAD, the way it behaves, like an example where VAD divergence happened near settlement? I would think that yes, that would be very likely. Just more of how the market works, that divergence would obviously happen a lot around settlement. Like the ones we looked at this morning was right here, you know. And then it had exhaustion going through settlement, had another exhaustion point, like right at settlement, trying to pull back. And right here, so yeah, I mean, any strong level, like where you're going to have a battle, just depends on how heavy that battle is. So if you have that heavy battle and it's pushing and it pulls back and it has sort of, it's almost like you're seeing the battle in action. It's like, okay, like the bears are fighting, the bulls come in, bears are obviously getting really weak. And then down here, VAT East, like, okay, the bears are taking over. It's time to, at this point right here, go, go, go. So the bulls are winning type thing. So the bears are getting weaker, the bulls are getting weaker. It's a way to look at it.